With me this morning from Roskill, I'm joined by Jessica Roberts in the studio. Jessica, good morning.
Morning, Andrew.
We're talking tin. Hasn't been a fantastic year as far as the price has been concerned. What have been some of the main reasons behind that?
Yeah, as you say, I mean, the tin price started the year pretty well. So it was sitting at about $20,000 per tonne. And it stayed within that sort of area for the first half of the year. But then coming into Q3 and Q4, we started to see it come down. And it's really struggled to get out of the sort of 16s for the last couple of months. So at the moment, it's sitting at $16.5 per tonne, which is a little tough for some of the producers out there. In terms of the main reasons behind that, I guess it's mostly come from the demand side of the market. So the use of tin in solders, for example, that's really been impacted by lower production of consumer electronics, automotives, semiconductors and so on. And sort of framing all of that really is the US-China trade dispute that's been happening. So it's a bit of a tough market at the moment.
And this tough market, has that impacted, I'd imagine it has, but tin project developers? That's hampered their efforts.
Yeah, I mean, I guess you could say project developers never want to see the price come down. But, that said, I think on the sort of bank side of things, the developer side of things, perhaps what they pay more attention to is price stability. And I think particularly in some of these more opaque metal markets, the volatility in the tin price might have been of more concern to them recently. But, our analysis of the sort of production cost side of the market suggests that most producers are making a profit even at current price levels. And certainly some of the projects that we see coming through are comfortably below $16,000 per tonne. So they would be making money even at current price levels. So that includes some of the projects like Alpha-Min in the DRC, Afritin in Namibia, and Casper Resources in Morocco, and I think Strategic Minerals as well in the UK. So I'd say at the moment, you have got some producers perhaps being squeezed a bit, but they're really only sort of those fourth quartile producers.
What are the expectations as far as next year?
I think next year it's really going to be, on the demand side, sort of strongly determined by what happens with the US-China trade discussions. So if we see a positive resolution to that, then I think we'd start to see tin demand increase quite well, sort of correlating along with an uptick in semiconductor demand, consumer electronics and so on. On the supply side of the market, what we saw in sort of 2018 was some quite large stocks build up on the refined side of the tin market. And the tin market this year, in the refined sector at least, has actually been in a slight deficit. So we're expecting that to continue into 2020, and those tin stocks will start to be drawn down. And then as a result, hopefully we'd start to see some sort of recovery in prices as well.
But a bit longer term, what do you reckon the bigger picture tin story is going to be?
Yeah, so I think there are two sort of big changes that are coming on the horizon. On the demand side of the market, I'd say you've got this whole story around lithium-ion batteries, which is affecting tin as well. So there's potential for tin to partially replace graphite as the main anode material in lithium-ion batteries. And if that happens, that's going to be quite a substantial growth prospect for the market, and indeed one that would be very welcome. Tin demand has essentially been stable for around about the last decade or so. So a new market application would be very encouraging for everybody in the sector, I think. And then on the sort of supply side of the market, I think the big change that we see coming through is this really quite substantial tin feedstocks deficit situation that's starting to develop at the moment. And that's really coming from the fact that some of the existing large tin mines are becoming depleted, and we're expecting some of those to come offline. So we are expecting tin feedstocks to be adequately supplied, but that's really going to depend on secondary tin production increasing quite substantially. And also some of these tin projects that are being developed at the moment, ramping up as we expect them to. And as we've seen with Alpha-Min in the DRC, the bridge collapse that happened a couple of weeks ago, there are potential unforeseen events that can occur and can affect the market. And, if some of these projects don't come through as we expect, there's the potential there for quite large tin feedstocks deficits to open up. So with that, higher prices as well.
Good to get your insight. Jessica, thank you.
Thanks very much, Andrew.